Are stocks smooth sailing then until that happens, until the Fed blinks or whatever you characterize it as and makes its very first move? Is it smooth sailing for the stock market until that happens?
I hope it's not. I don't know why we were rooting for smooth sailing. There are 75 million millennials in the workforce. They're somewhere between the ages of 25 and 45. They are forced investors for the next 2.5 decades minimum at the high end. In some cases, 4 decades. They have no choice but to buy stocks. That's how the entire retirement system of this country has been built. So why would they be rooting for smooth sailing? Why would somebody who's 30 years old, who is forced to buy stocks for the next 35 years in a 401k, want all-time record high prices and no volatility? It makes no sense. It makes no sense.
Yeah, well, because
so
Jenny,
here's the question.
Because,
whoa. Here's the question. Where should interest rates be if the economy is growing 6%? We're going to get unemployment by the end of this year at the current trajectory down to 5%, which the Fed said is its target. And we're going to approach 2% this fall, hopefully, if we're lucky, in inflation. Where should rates be? Should they be at 0? Does that make sense to anybody that we should have emergency level overnight Fed funds rate at 0 with an economy growing at the pace that this one is growing? Of course rates should rise. It's not better or worse. It's just a different environment than the one we were in last year. The market will be volatile. It'll adjust, and then we'll live our lives.
Steve?
I think it goes without saying that during that process, you have volatility. And I think the members of this panel can speak about this more eloquently than I can. But you have volatility. Some people don't want to hold 10 years at 1. They do want to hold them at 1.5. And there's a bunch more going to hold them at 2 and more than 2.5. So those people that Josh is talking about are forced to hold equities. That number comes down, and you have stock trading hands to get into strong hands with higher interest rates and higher growth. At some point, the 10-year looks attractive for some people. By the way, it's worth pointing out rates are still negative around the world, so that does keep a cap on how high yields can go here in the United States, because that'll attract an awful lot of foreign money at some yields.